So it's a company I believe in for the long term. I think Elon Musk is a very smart dude. Controversial. I don't really care for like, his big controversial takes on the world, but as a businessman, I think he's a pretty smart dude. So with that said, that is what I've got for you guys. We've got our next guest taking over the stream here. It's Chris Pulver in just a second. If you guys would like to see the trades that I'm taking all the time, you can join access to our Discord server. We are doing 25% off during this live stream. You can get 25% off the signals. What do I trade? I trade options, of course, what we just talked about. I also trade things like gold and oil and silver and the S&P and the Nasdaq and currency pairs, euro, pound. I trade a little bit of everything. I'm not, a niche specific trader. I am a trader that trades a pretty broad list of items. And coming up next, our next guest is the same way. He trades a little bit of everything. Diversifying the account is something pretty cool when you employ this sort of approach. If you'd like to get access to our signals, 25% off here, send us a direct message. You can also get 25% off today, Chris Pulver's trading signals, and he's going to be joining us here just after this quick break. Stay tuned. Here comes Chris Pulver.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Friday. How we doing? Well, markets ripping to the upside. We got some fresh all-time highs. Happy 45 for the S&P. Let me show the screen here. Sorry about that. It's had a lot of stuff going on this morning. I took a little strangle that ended up managing for a small loss because we just went ballistic and directional pretty much right out of the gate for the first 30, 40 minutes of trading. Took a quick win on oil for CL. P&L's up on the day by a lot. I still have a 580 call that's looking better. I'm going to see if I can close this one out. Right now it's up. I mean, unfortunately, it was a 1 DTE, so it was cheap, but it's still cheap, and I'm not making a ton of profit on it. But I'm going to take a look at the option chain really quickly. If we do get to 580 today on the SPY, I'm looking at making some profit here. I mean, somehow if we had this would be insane. But if we started today at 576 and we blow this market up to 585, that is a little capitulatory, or however you want to say it, but it could happen. So I have a SPY trade at 580. It's had a nice little P&L swing on the day, but still just barely coming back to life because it was a trade yesterday that was down and flat. Let me just look at the option chain here. So the 580 is trading around 77 cents. If we keep making our way up to 580, 581, I don't know. It's unlikely, but who knows, man? Anything is possible with this type of move. I mean, the news doesn't appear to matter. Maybe this is it. The market just breaks the high today again, and we have yesterday's high. This would have been Wednesday's high. This would have been Thursday's trade, like right between the CPI candle. It was just choppy all day, and then Friday we're breaching the high. But if we just make a little poke above the highs and then retreat, that wouldn't surprise me. But if we make a breach of the high and we just stay bullish all day, who knows? So I'm going to keep an eye on that, but it's not quite enough. I guess it is. I can go to break even or better on that trade. So I've got it in. Let me see what that's trading for. I've got a trade in for $1.16 credit. I'm just going to move the stop loss order, which means I'm likely going to get stopped out. But I'm going to put this thing at 60 cents and put this in as a stop market order and just essentially take it at break even. So I paid 58 cents for the debit. I'm putting in a stop loss at 60. And if it wants to go higher and higher, I hope that it does, then I'll just let this thing run for the day. So stop market here at, let's go 60 cents. And we're trading right now 86. So I'm going to try to let those profits continue to run on the upside. So that stop loss is in. And if this keeps drifting up higher, I'll just keep an eye on my other screen, which looks like this. And if this thing just goes green, green, green through 580, then I'll take a look and maybe close it out for $1 plus and try to get like 100% return on capital. If I just keep the stop loss at break even or better, then hopefully this just keeps running up into higher levels, and I can manage it for even more profit. So that's best case scenario. I did take a couple losses this morning on the SPX. So a trade that I like to take is at opening bell, I will sell calls above and puts below and usually grab some quick profit. That was yesterday. That was the day before. And usually you have those be really nice wins in the morning. And then today it just was a lot more directional when we had this bump here at 10:05. Just started to push me out into my stop loss area. So I'm not going to let the trade get too big on the stop loss side. So I ended up managing a small loss this morning. But that is about it. Other than that, like portfolio is doing okay. One thing that's a little income play for me is Walgreens is an income play for me. I bought some shares at $8.80. I then sold an in the money call at $8 for $1.15. So I actually got about 35 cents of extra premium there. So it brings my cost basis down to $7.65. I need price to stay by next Friday. If price stays above $8, you get called away for 35 cents a share. That'll be $350. I also did a similar trade on JD, and I bought the shares at $43.90. I sold a 44 covered call for 60 cents credit, puts me at a break even around $43.30. I'm going to check that position right now, because if my call side at 44 with a 0 DTE is already down to, like, let's say 10 cents or 5 cents debit, I might just close it and then put a new trade on for next week and collect that extra credit over the weekend. So I'm going to take a look at JD right now. We did have some earnings overnight. It was mostly in the financial space. BlackRock hit all-time highs. JPM was pretty quiet today. I'm just going to spot check those plays. So BLK for BlackRock had a nice gap to the upside. So we had a 954 gapped up to 960 and just ripped here. BlackRock, of course, which owns like a third of the world's assets, pretty much, is just ripping here to all-time highs. I'm sure they're loving it, and they might be getting a lot of extra celebration because of their hat in the ring with crypto. Bitcoin actually tapped below 60,000 overnight, but is coming back a little bit. So Bitcoin is now, where are we at? Bitcoin's at 61.8. I was looking at a trade on MicroStrategy. We're coming up near all-time highs on MicroStrategy. Have these other ETFs turned yet? So BITO turning up today a little bit, IBIT turning a little bit, FBTC turning a little bit, Bitcoin after a little bit of a dip here at 50, almost just below 59,000, turning up. MicroStrategy, I've got a chart alarm set at all-time highs. I mean, that's impressive. It's like Bitcoin's not at all-time highs and MicroStrategy is. Not sure how that plays out, but it is what it is. Gold is up today as well. Silver is up as well. The inflation readings that we saw today, I mean, the SPY's just up higher. We're at 579.81. So my little SPY trade here is trading up over $1. So I've got 58 cents into the trade. It's up to $1.09. I mean, this thing might as well just freaking rip. Might as well rip. $1.10, $1.12. I mean, just go, would you? $1.15. All right, I'm going to move this stop loss now to $1.10. What? Rejected? You guys are idiots. Close. Oh, let's go. I'll go $1.05 and just probably get this thing stopped out. Filled at $1.05. Okay, so that was a quick win. Trade update here. SPY, 10:11 expiration, 580 long call, 58 cents debit, closed for 1.05 credit. Okay, and that should be in our Discord as well. A1 trading should be an index trade under my section. Let's see here. Yep. So I canceled the 569, 568, 567. I left the 580 on. I'm going to do a quick update on that trade right here. So edit message and update. Closing for profit. Is this thing going higher again? You son of a gun. Yeah, a little bit. I mean, it's for a 0 DT, it's like this thing has to squeeze like crazy But we're sitting right there at 580 today. If it gets to 585, as Chandler says, skin me alive and call me luggage. Little inside joke there. All right, updating that SPY trade for 580. $141 debit. Closing at $1. And then a 58-cent debit closing at. All right, let's get that one updated. Okay, so that's updated in Telegram. Just going to keep an eye on that price. Okay, I want to take a look. So silver's up today. Gold is up today. The portfolio is doing pretty well, up about 14 grand, despite the little paper cuts on SPX this morning, which was frustrating. But it is what it is. You know, it just was a directional day. This market is just flying high, I guess. So here's the SPY at all-time highs. The Qs not quite breaking out to recent highs. The Dow also breaching all-time highs. The Russell, pretty bullish on the day. I mean, advanced decline line's got to be up there. Let's go to FinViz today. Advanced decline line's got to be up there. Look at this, 70% of stocks advancing today. We're lighting up green here in the financial space. This is a good way to kick off earnings. I'm not going to lie, just based on this heat map right now. When you got JPM up, Wells Fargo up, Bank of America, Citigroup, all these stocks showing green like this as we kick off earnings season, it's probably a good thing. Capital market, there's Morgan Stanley, there's Goldman Sachs, there's Schwab, PNC, USB. So off to a pretty good start for earnings. If that is any sign of the consensus that we're about to face with earnings over the next 2, 3, 4 weeks, this, I don't know, this truly could be like the market is just, who cares about inflation right now? We're going to run hot. The best place to be for taming inflation and offsetting inflation is to be in the stock market, right? So assets go higher. I mean, if you saw the news this morning, here's your 10 a.m. news. We had the 8:30 PPI data that came out, also slightly higher than expected. The PPI year over year was 1.6 forecast, came in 1.8, revised higher from 1.7 to 1.9. So higher producer price index. PPI core, forecast at 2.7 came in 2.8, revised higher from 2.4 to 2.6. Prices go up. Okay. Our stock market goes up. Inflation expectations for the University of Michigan go up. They're talking about 1-year inflation expectations at 2.9, 5-year inflation expectations at 3%. So doesn't scare the market right now, obviously. So Dow's at all-time highs, SPY's at all-time highs. It is what it is. I mean, I just had a directional day, and unfortunately that didn't bode well for my little strangle, but it's okay. I'm just not going to let this thing get out of hand. I mean, if I want to sit here and let it go all day, it's like I'm risking, I don't know, $15,000 or $1,500 to make $50 to $100. It's just not worth it. So I cut off the trade with a $300, $400, $500 loss just to be on the safe side. But like I say, it's paper cuts considering the overall portfolio is doing fine. I'm looking at some income plays on WBA. I didn't get a chance to do any financials on the earnings side, but Domino's Pizza was a good one this week for $500. And next week we have more earnings. Netflix is on Thursday, so we'll definitely price out Netflix next week. And that's pretty much where I'm at for right now. I did a little strangle in oil. Let's do some just spot checking here. Anything on the currency strength currency strength side today? Currency strength. Japanese yen getting weaker. Swiss second. CAD had a bounce with, I think they had solid news this morning, didn't they? Yep. So unemployment went down to 6.5. Their unemployment jumped up about 20,000. And then there's your PPI news out of the U.S. this morning. Consumer sentiment lower. Inflation expectations didn't have a forecast, but it's higher than previous. Like we showed there on the Bloomberg, it was slightly higher across the board. So to me, it's weird. Like this week, it was CPI hotter than expected, PPI hotter than expected. Market's like, we'll go higher. Makes sense to us. So I'm not complaining. I mean, look, I'm happy to see the market go to all-time highs. It just makes the trading easier, makes portfolio melt up. You know, it's just better. But it doesn't make a lot of sense when you're thinking like, okay, we're at all-time highs. What about this election stuff? So I'm probably just overthinking it, and I just need to stay out of the way and stay bullish. So that is also why, every week I'm pretty much placing like the same bull put spreads and the same credit spreads and going after the same type of like long-term gains with these expirations out, 30, 60 days, 90 days. Hopefully I can get some income here if JD will stabilize. I did have a thought yesterday. If Trump wins, I'm wondering if this whole idea of imposing crazy amount of tariffs in China is going to smash these China stocks lower. So that might not be a good thing for me, but I hope that's not the case. At least for the China shares. I mean, if he wins, okay. If he doesn't win, okay. I don't think either candidate's going to be great. They're both going to be adding a ton of deficits. But from what I saw, I've seen that the Republican side is going to be adding a lot more to the deficit faster and the debt faster than the Democratic side. But who knows? It's the lesser of two evils, or it's you're so disgusted with the U.S. politics that you'd rather vote for I don't know. I'm going to write in Joe Pesci, I think, for my president. All right. Let's see here. US 30, SP 500, both going well. Good, Greg. Good stuff. Yep. So, okay, I'm going to look at JD. That was actually what I started with probably 20 minutes ago. And obviously, I had a squirrel mind today. So I have the covered calls. Let me double check this here. So I have JD. So I've got my shares. They're covered at 44. We're trading at 43.14. Right now, it looks like I have most of the profit here. So I've got the P&L open percentage. I'm about 90% in profit of that covered call. So I want to see what it's trading for. So right now, I mean, for me to grab an extra 8 cents today is not worth it when I can just close it out, take the 52 cents, recalculate my position, and then add in another covered call for next week. I don't think price is necessarily going to get up to $44 today. It's unlikely. That's trading at like a 16 delta. So there's about an 84% chance that it stays out of the money. All right. If we do get up there, then okay. But I don't think that we're going to. So to be on the safe side, I'm going to go out another week. Let me see if I can do a quick roll on this, and I'm going to add a net position here. So let me go back to my positions. I'll take this position here and roll it. So I'm going to close out the current call at 8 cents. I'm going to roll it to next week and see if I can grab an extra credit for this. So I'm going to do a quick roll. Try to do this again. So a quick roll. There we go. So I would be buying back the current call at 8 cents, and I'm looking to roll this out a week and collecting a $1.30 credit and keeping the same strike price. If I roll this down, I collect $1.49, but I'm losing 50 cents. That's still making an extra dollar and change. It's just getting a little bit tighter to price. Let me do the math on that. So right now my break even, Tesla, yeah, I'll take a look at Tesla. Just let me get through this covered call situation here on JD for a second. So I've got to go to my little tracker here. I'm doing this. So what I'm going to do is I'm going to do the math on this if I make a trade, and I'll update this in the Pulver alerts in the Discord channel. So right now I own the shares with a break even of 43.30. If I roll this down by $1.49, I roll my strike down to 43.50. The way this would work is I own the shares right now with a break even of 43.30. If I collect $1.49, that brings me down to 41.81. Gets called away at 43.50 for next week. I make $1.69 on 500 shares. I make $845 next week. That's not bad. So I think I'm going to do that as opposed to if I keep it here at 44. So if I keep it at 44, I have a 43.30. I roll it for $1.29, and then I get it called away at 44 times 500. So I make $9.95 if price were able to get up to $44 by next week. But just in case, I'm going to roll it down to just try to get a little bit tighter to price. I'm still happy making, $700 or so. So that's what I'm going to do. I'm going to roll this thing down. Let me see what this looks like. I'm going to do some math. 43.30 minus $1.70 brings me down to 41.60. Get it called away at 43. Oops. 43.30 minus $1.70. Get it called away at 43 times 500. I mean, I can make $700 if it gets down to $43. That's way tighter to price. Okay, so let's door number one. Okay, door number one is $700. Let's just keep track of this for a second. Door number one is $700, and that's price getting called away at 43 for next week. I guess I should type this, huh? So $700 at $43 if it gets called away. If I do the 43.50, that's a roll for $1.47. That would be, calculator please, 43.30 minus $1.47, and it gets called away at 43.50 times 500, $8.35. At 43.50. And then I'd make over $900 if I kept it at 44. So $1.27, 43.30 minus $1.27, get it called away at 44, make $9.85. I mean, the answer as far as making the most money is pretty obvious, but the issue is how much closer can I get my covered call to actual price? Does that make sense? So for me, I'm pretty happy just making the $700 and keeping my price lower, because that will also give me the lowest break-even price. Because if I have to keep repairing this, I want to keep my break-even as low as possible. So game time decision. I'm going to roll this down to 43 and out to next Friday, and I'm going to collect $1.70 credit on this. Hopefully $1.70 or maybe $1.65. Let's see if I can get $1.70 for this one. So $1.70, see if I can roll this out. $1.70 not filling. Let's go $1.69. Let's go $1.68. I will penny this down until I get filled. $1.66. Come on, you turds. $1.65. $1.66. Okay, so that trade is in. And I had this also on a couple other accounts. This one here. So I'm going to roll this out. Roll this down to 43. And hopefully collect $1.66. Filled at $1.67. And this account. There it is. So there's my roll. Quick roll. Down to 43, $1.71. Try to get filled at maybe $1.68. Nope, $1.67. $1.67. Okay, so here's the math. 43.30 minus $1.67. So now my break even is 41.63. So added a 10.18 expiration call from a roll for $1.67 credit. Break even is 41.63 with $43 covered call. If that gets called away, that's going to be $1.37 per share. So it gets called away at 43. $1.37 at 500 shares. I get $6.85 in this one for next week. So a little bit of an income play there. Let me make that adjustment. That's going to be updated in the Pulver Alert section. That would have been under the stocks and options. So JD, this is going to be a. Is everyone following that logic? I mean, if you're familiar with you own shares, you cover the shares. You can maneuver based on rolling out. So I roll out in time, and then I roll up or down in price, and I'm just collecting more credit. I just do the simple addition subtraction. Because I'm rolling for a credit, it lowers my cost basis, but I am lowering the strike price a little bit lower. So if it gets called away, my break even is lower. To me, it's more important that my break even is moving lower. That way I can still massage this trade lower if I have to. So I'm going to edit this message here, and this is going to be an update So 500 shares, 350 in income. So the nice thing is going out to next week, if I get it called away, I actually go from 350 in income to possibly 685. So that's a nice little chunk. So update, I rolled the 10/11 expiration $44 sell call out and down. So for credit. So the new covered call is a 10/18 expiration $43 covered call. And the updated new ownership break even is 41.67, I believe. 41.63 is 41.63. And looking for shares to get called away at $43 for $1.37 per share. That'd be income of 685. All right, so that has been updated. Any questions on that? All right. Someone asked about Tesla. Let's take a look at Tesla. So Tesla, big drop. No earnings. I mean, earnings is Wednesday the 23rd. Drop on Tesla. I'm sure the IV jumped up here. I don't think that's a bad play. Tesla. So we have earnings on the 23rd. I'm actually curious, Nick, would you, if you're, I don't know if you're listening, you're typically doing other stuff. I'm curious what Nick put in for his expiration on his put, how far he went out to do that put. So the IV jumped up to 63.2, I'm sure, on the sell-off. We do have earnings coming out on the 23rd. I think what I'm going to do on Tesla is this. 15th? Okay, perfect. Thanks, Nick. Cybertruck, I know it's not great. Did you hear that? I thought I read this somewhere that there are insurance companies out there that are no longer insuring Cybertrucks because of the poor quality. That's kind of embarrassing. You got a car that nobody wants to insure, but I see them all the time. I mean, I see Rivians out here and I see freaking Cybertrucks. So people love those $100,000+ vehicles. All right, 221. So my point is we have earnings, right? I wouldn't mind taking a trade on Tesla for this reason. Now, you got to hear me out here, because if I take this trade, there's two ways to trade it. One is if I just do a simple credit spread and price goes down, we just take the loss on the credit spread. Okay. If I take the credit spread, price goes down, and I can take ownership of Tesla, I'm willing to do that. Okay. So I'm going to take a stab at Tesla for this reason. Earnings is end of the month. All right. If we end up giving a gap fill, then that should be a credit that gives us a nice little income pop. I'm willing to own the shares. I'm willing to do it with a credit spread. So similar to what Nick did by just putting in a put, if I do a credit spread, in price goes lower, then I can take my long put side and actually work my long put with the current drop in price and take the shares cheaper. All right. So I'm going to look at this trade and see what I can get for let's go out to I'll take the monthly expiration as well. The 15th is pretty good. So if I did at the money, let's go with 225 put. So if I sell the 225 and I buy the 220, I'm getting 270 credit. So this trade, if you're comfortable with the trade, if you win on the trade and price goes higher, you keep the 270 credit. If price goes lower, I'm going to use the long put to then cash out for profit if price drops, because here's how it would work. Let's say that hypothetically price drops to 160. Okay. If price drops to 160, think about this. So I have a 225. Let me type this out. This should be logic that, I mean, if you're familiar with options, this is how it can work. So if I do a credit spread and I do a 270 credit, and my assignment price would be 225, potential assignment, right? Now, if I have the 220, this is my hedge. So if Tesla drops to 160, my 220 long put is worth what? Answer this question for me. If price goes from current price at 221 down to 160, my 220 long put is actually going to be worth $60. Okay. Everybody following that math? So 220 down to 160 is a $60 hedge, which means I can close that trade out for a profit of $60, which brings my 225 assignment price. If I take the shares, I get assigned at 225. I take away my credit spread, and I then hopefully protect, let's say $60 on the long put, minus $60 on the put. I can own shares of Tesla with a drop all the way down to $160. I could own the shares outright at 162.30. I'm going to take this trade. Okay. So it's an income trade. I should have enough capital in all these accounts to own it. If I own the shares at 162, that's only a $16,000 cash requirement. I've got enough cash in all these accounts, even my IRA accounts, to take those trades. I'm going to do this. So I'm going to take the trade right now at a 225 by 220, try to get 270 credit if I can. And that is pending. So 270 is not filling. Let's try to get 269. Hopefully it fills at the mid price. 269 got filled. Okay, I'm going across the board here. There we go. Okay. Fill. Okay, 269 is not filling. I'm going to massage these two accounts here. 269, 268. Filled at 268. Okay, this one's 268, hopefully. Come on. Filled at 268. Next one here. Filled. And filled. And filled. Okay, so that is in. I'm going to update this one in my alert section. This is a trade for Tesla. By the way, let me know if you're in the Pulver alerts in the Discord channel. Is it helpful if I put an at everyone when I post an update? I mean, I'm updating trades all the time. If you want me to type in at everyone, I usually do because I make that little disclosure at the end. New trade. I think everyone gets it. I think it was the blog or my trading journal that I wasn't putting everyone on. So I'm just writing to myself. All right, 10/11 expiration. Oh, sorry, that's today's date. We have the November 15th expiration. November 15th expiration, we have the 225 sell put, the 220 buy put, 2.68 credit, and that's filled. Okay, there's two approaches to this trade. One, you don't want the shares, so you just want price to stay greater than 225 by expiration. Two, you do want the shares, so you want price to stay greater than 225, or you can use the long put as your hedge in the event that Tesla shares drop before expiration. I am willing to own Tesla and repair the trade as needed. All right. So what I'm going to do on Tesla is this. I've got the trade in here. You know, it's a nice little range. We had a gap lower today, earnings at the end of the month. I would actually, this is true. I mean, it's going to be a little unpleasant because look, here's the deal. Has anyone out there, let me ask you a question. Have you ever been assigned stock and you don't know what to do with it? So for example, if you don't have the account to take on a $16,000 position and your broker's like Reg T, margin alert, maintenance call, and all of a sudden it shows like you owe the broker money. If you've had that happen before and it causes you to panic, I get it. I've walked a lot of traders through that before. You don't have to panic. So even though I take a credit spread and there's that potential risk of assignment, It's an easy way to close a position. This isn't like a Forex broker where as soon as you over margin, it liquidates your position automatically. You have time with a stock and options account. You have time with the margin account to do this. So if I take the 225 by 220, let me type this out. So 11:15 expiration, 225 sell put, 220 buy put, 2.69 credit. And I'll put here willing to own shares and manage long put profits if price falls. I want to own Tesla as cheap as possible. All right. Now, full transparency, Tesla is not valued to be a $300+ stock. Tesla's value is like 130. Check this out. So it's growing. It's forecasted to grow. The price to earnings, price of shares is pretty high. Price to sales, price to earnings pretty high. Current price 238. Fair value is 140, 137. So if we have a miss in earnings, I'm going to lower the cost basis like crazy. But I'm willing to take that position because the premiums are so good. They really are. So it's easy to repair the stock. So let's say that I took the assignment in Tesla. Okay. If I take any assignment and I went out like 30 days, I'll go out 28 days here. An at the money call is trading for $13 to $15. So even if I took on assignment at $200 and some dollars or $225, I could lower the cost basis by 15 to 20 bucks. Okay. MicroStrategy is just an all-time high. Got some crazy stuff going today. All right. So anyway, I'm going to take the shares if they're assigned, and I think I can easily repair this for a maybe $5 to $10 profit, even on just one share or 100 shares. But if I use the long put to my advantage, if price does drop, and I'm kind of hoping this happens, if price drops down to like 180 or 165 or so, I'm going to use that long put and I'm going to cash in the long put, take the assignment, and the assignment won't happen until 11:15. But in the event that price is really getting bearish, then the market may assign, or the broker may assign me early. So I want to be managing that long put. Now, if price just goes up from here, okay, there's a dip and it just fills the gap. Well, that credit spread by expiration will be, $2.70. Okay. All right. So anyway, I like the trade. And if I own the shares at fair market value with this, potential speculation up to 240, 250, there's a lot of potential profit here. And I think Tesla, give it more time. Eventually, this is going to have to make a decision. I would imagine that people like Tesla enough that it's going to be higher, provided they don't botch anything. But you never know, right? There's a bit of a wild card here, but there's some enthusiasts out there. People love their Teslas. And I still think at the end of the day, this is more than just an auto company. This is a energy play. This is a tech disruptor. This is going to be in the chip space as well. So there's a lot of potential, like crazy value. And I also think that Tesla's probably going to be one of the most profitable companies in the world, because at some point there's going to be zero humans working for it. It'll be humanoids and robo-taxis and robo-vans, right? So anyway, that's my trade. But this is a good example of I'm looking at this for credit and income if price goes up, but if it goes down, I do want to own the shares and own it way, way, way cheaper. Okay. All right. So let me take a screenshot of this, post this in the Discord alert section. Team, am I good for a little bit past 11 or am I out at 11 o'clock? Let me know, please. Yesterday we had FOREX James on. I thought it was Nick Phillips because he usually comes on after me, but sorry about that to James if he's coming on today. Or Nick, if you're on, look forward to seeing you. All right, so here's my Tesla trade. There's my image and then my little disclaimer. So that's going into Tesla. Okay, Nick Phillips will be on soon. Cool. All right, so I will leave you with this. In a couple minutes, I'll be out. New trade on Tesla, update on the SPY. I closed out that SPY long call for a small profit. I had a $1.40 that I paid for it, and then 58 cents. I closed out for a net winner. Not great. I got smoked a little bit today on my daily profit play. I had one winner on oil, and then the SPX actually was directional. I got hit for 3 small stops. But overall, the market's still melting up. I'm still up 12 grand on the day. Took a little paper cut. But the nice thing is too, even this Tesla trade, like the loss I took today in SPX, this Tesla trade, I'll flip it for probably a couple $1,000 or just be an income trade for 270. And that's fine too. But realistically, I wouldn't mind taking the shares because if I own the shares, I could confidently flip that for probably $1,000 to $2,000 of profit. And I'm going to use options to do it. So that'll be a nice way to kind of juice the portfolio in the next maybe 30 to 45 days. Inflation news this week. Market doesn't seem to give a crap. It's not enough to damage the market. And here we are sitting here at all-time highs. Something tells me this seems to be a bit political where it's like, hey, look, all-time highs. Congratulations. Everyone 401k is doing great. But it's like the reality check is not now. And this is why the John Maynard Keynes saying is super famous. The markets can remain irrational longer than traders can remain solvent, because this is, I'm not saying this is irrational. It just shows that again and again and again, this market doesn't really want to have any reason to pull back, right? We had reasons, like here we had a pullback because Powell was not going to cut rates. Here we had a reason because of JPY's deleveraging. Here we had a reason just because it was a September effect. What's our reason now? Well, we just shrugged off employment news. We just shrugged off inflation news, and the market's at all-time highs on the Dow and on the SPY, right? And the Qs are playing catch up maybe a little bit, but what do you do? So is this just feed the beast and momentum begets momentum? Quite possible. So just don't be surprised. Don't tune out this 600 level because I think it can get there. There's still some disruption ahead, but it's exhausting to sit here and try to be super cautious. I'm just a little frustrated that today was more of a directional day, but that's it. So I'll let you go. I don't want to go too long and chew up into Nick's time. So Chris, I posted a question in your Discord for you. Okay, I'll take a look at that. And then yeah, after this, I will be traveling out. I'm going to the Midwest this weekend, so getting ready to travel out today. And have a fantastic rest of your day, everybody. Have a great Friday. Have a great weekend. And Nick Phillips coming up next. All right, thanks, everybody.
Gentlemen, how are we today? I think someone turned off the lights here, but it's whatever. So you're here for a job interview, Mr. Nicola and Vlad.
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh yes, hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Good morning, good morning, good morning. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips. I have a little headline company called Victory Capital where we share headline news and all sorts of other things. If you guys want to, feel free to check that out. I'm going to go into just a little bit of what's been happening this week in the market. Hello, Jacob. Nice to see you. I am kind of shocked, a little surprised this morning that we are seeing new all-time highs being made in the stock market. I just heard Chris mention this. It's one of those things where it's like, okay, is this market going to care about anything? Because as of right now, it does not. It is just rally, rally, rally. Inflation news, forget about it. Labor data, forget about it. Doesn't matter. We're just going to keep buying the stock market up. So my mind is kind of blown, especially it's Friday, October 11th. It's a random day, sort of near the middle of the month. No real catalyst. No, it's completely, in my opinion, it is irrational. I think Chris touched on this for a minute and said, the markets can remain irrational longer than traders can remain solvent. I feel as though these moves this morning are incredibly irrational. It doesn't make any sense, but nonetheless, it is what it is. I personally have been trying to scout out or scout out an opportunity to take this thing lower to kind of fade this move, but I haven't found anything I really like yet. I did sort of miss this head and shoulders pattern earlier. I got busy doing some other stuff. But regardless, I think I'm gonna hang out on the sidelines because this movement doesn't make sense to me. The push doesn't make sense to me, so I'm gonna stay out. This week overall has been a pretty quiet week. Let me pull up. Pull up the calendar from my community and let's just review what we did this week. So this week we had the NZD rate decision that we traded Tuesday night. We had USD CPI yesterday, pound GDP this morning, and CAD unemployment, as well as USD PPI this morning. Now the CAD unemployment and the USD PPI situation came out relatively mixed. CAD employment pushed up, I believe. Let's see. So the employment change, significant employment change on the CAD side of things, but their participation rate was slightly lower and their average earnings were slightly lower. So I didn't trade this, even though the CAD did experience a pretty sustained upside move this morning. It has since faded that move, but this initial push here wasn't bad. I wasn't willing to get involved with it because of the earnings side and the participation rate side of the news this morning. And this fade makes sense given that understanding, that idea. So, and then we saw the same thing with the Doxy off of the PPI news. PPI news came out kind of mixed. And what did we see? We see this initial drop to the downside, push back up, drop back down. The market, let's back out to like maybe the 1 minute so we can see this a bit more clearly. Because yes, I'm a bit of a psychopath and I trade the 5-second and the 15-second charts. So we saw this big drop to the downside off the PPI news, but the PPI news was mixed. So really, why is the Doxy reacting like this? Oh, the market doesn't know. Oh, pushes all the way back up. Well, why is the market reacting this strongly? We don't have any reasons. Oh, we don't actually know. And now here we are trading back at the same levels that we were trading at prior to the data actually dropping. So this is one of the approaches that I take to trading news. We always do 4 scenarios. 2 of them are going to be tradable. 2 of them are going to be not tradable. The 2 that are not tradable are data that comes out as expected or data that comes out mixed. This morning was mixed, no trade, and this is a perfect example. It doesn't always work out like this. Sometimes the market ends up moving directionally, even on mixed data days, but more often than not, you see that mixed data will cause a bunch of volatility, ton of volatility. There's a ton of volume in this market, but there's no clear direction. It's just the Wild West. Data hits the market and some of it points one way, some of it points the other way. Good luck, right? So that's a stay away. We walk away. We don't take a stab at anything, and then we come back for the next event. So let's check out how the dollar is doing on some of these higher time frames. Still within this sort of range that I've identified over the last few weeks that I think the dollar's likely going to stay at prior to the election. I could be wrong. This thing could rally. It could drop from here. My idea that I've gone over multiple times on the show already is that we're going to hang out somewhere in here. Even if maybe we push up out of here. I think until the election happens, which we're really only 24 days from the election happening now. So that's not even 24 trading days. That's 24 calendar days. So trading days, I think we probably have closer to 15 to 20, somewhere in there. So, the next 15 to 20 candles, I think we're going to see dollar sort of just go flat, just go sideways, barring any major fundamental changes. What do we want to touch on? Gold doing a bit of a rally. Again, I'm not interested in trading gold. I don't like to get involved in markets when things are all-time highs. Just not something I want to be trying to trade unless I'm going to try to fade it. But I don't have a reason to fade gold. I don't have a reason to get in and sell this to the downside. So I'm not. Pound. Let's see. The pound has been moving today. Now, pound GDP data. This is another great example of data that really didn't do much. We had a GDP this morning at around 2 a.m. and it was mixed. And we see this clearly mixed reaction in the hour that followed, and then a rally out of nowhere on the pound. For what reason? Couldn't tell you. There's really no fundamental reason that this thing rallied this morning off of mixed data. I think it's just a continual investor positive sentiment for the pound. Now, granted, we are at this major support, so a little bit of upside makes some sense. As far as, are we going to continue to rally on the pound, or are we going to break down below this support? I think we're going to have to wait and see. Next week, I believe we have CPI for the pound. So that should give us a little bit more of a directional understanding. I would assume we get some inflation data out of the UK. Yes, we have that on Wednesday. So next Wednesday, hopefully we get some clarity on the pound. All right, that's really all I've been focused on today. Like I said, it's been a quiet week for me personally. I've only taken 2 trades. Both of them were wins, but they were really small wins and nothing to write home about. I'm hoping next week we get a little bit more of some directional opportunities out of the Forex world. Does this 247 shorts says, does this remind anyone of the 2008 financial crash? 247 shorts, I was 12 in 2008. So I know I have a really good understanding of, I guess I shouldn't say really good understanding. I have a understanding that's based entirely off of the book and the movie The Big Short about what happened in 2008, but I couldn't tell you the intricacies of what the market may have looked like in 2008. I didn't have my finger on the pulse of the information. I was, playing pickup football games. So I have no idea what was happening in the market. Maybe explain what you're thinking. What part of the 2008 financial crisis are we experiencing now that mirrors that crash? Because from what I understand about that, we're about to get on a whole tangent here. What I understand about the 2008 financial crisis is that it was entirely based on basically bad lending on the bank's part. The banks, I believe in the 70s or 80s, possibly moving into the 90s, they created these mortgage, I want to say it's mortgage-backed securities. And they were originally intended, the idea was everybody pays their mortgage. Who's not going to pay their mortgage? Let's create a security to bet on the fact that everybody's going to continue to pay their mortgage, right? And so when they created the security, then they also created all these like groups of mortgages that could get packaged together and graded, and they were giving all these groups of mortgages really high grades, even though a bunch of them were stuffed with terrible credit scores. People that actually couldn't pay back their mortgages when interest rates changed. And in 2007, 2008, a bunch of these little packages of mortgages had enough people in them that had adjustable rates on their mortgages that when those adjustable rates kicked in, all of a sudden they couldn't afford their mortgages. And you had, I don't know if it was thousands or millions of mortgages in default. And so the entire, the housing market crashed, everything crashed. That's what I understand about it. Can I show on the charts now what it looked like then? I mean, I could. Yeah, let's look at. I'll say this: charts can look similar in many different instances. Like they can start to look like they're going to fall very similarly to how they did maybe in 2008 or in 2020 or in the 70s. Like it can look that way on the chart, but that isn't necessarily an indication that something is about to happen, if that makes sense. So yeah, I would say for me, I don't see any real risk that looks similar to we had some credit default stuff. Credit defaults were up over the summer, I believe, but as far as anything else, and with the housing crisis came a bunch of regulations. So many things ended up changing in the financial world due to that crash to protect the financial world from ever experiencing that kind of crash again. And I think the next major crash, at least the next major crash that I'm aware of, was COVID. And COVID was an easily explained crash. The entire world locked down. So if the entire world locks down and nobody's spending money, nobody's buying anything, nobody's selling anything, there's no value in holding stocks that are based on people buying up supply. So, easily explained. The 2008 crisis, maybe not so easily explained, but once you get a decent understanding of it, which I have like I would call it like an elementary understanding of it, because I can't relay that information at a very high level. But from what I do understand, it was entirely based on the banking industry they created almost a bubble of sorts based on, they were incentivizing people that really couldn't afford to pay mortgages to take out mortgages so that the banks, could bet on the fact that those people would continue to pay their mortgages. I think it just kind of got lost in translation somewhere among all the bankers that were in on creating this sort of system. Like, I think it was one of those things where it's like they bit off more than they could chew. They thought they were doing something good for the banks and for themselves, and it ended up causing a really big problem. So, but as far as the charts go, I'm going to go weekly just because it's kind of difficult to look back. What is that? Math is terrible right now, like 16 years to 2008. So just looking at the S&P, I mean, in 2007, we were tapping into highs that we had tapped into the early 2000s. So that's an area of resistance, right? We didn't necessarily hit, I guess we kind of tapped new all-time highs, but we didn't create any sustained all-time highs. Like now we're creating sustained all-time highs and there's nothing to the left of the chart. So it's not like it's tapping into a previous area of resistance. Yeah, honestly, I don't see many similarities at all. These charts this chart area here, let's call it we'll call it from the beginning of the year, January of 2024 to now, October. It's kind of been rallying all year. And in 2008, crash is happening here. It kind of, I guess, arguably starts here. Not really the same. I mean, let's say we'll go January of 2007, because I guess that's when this big downtake started, was 07. Rallied a bit, but certainly not as much, not with as much ferocity, and more pullbacks and a bit more sideways. Yeah, I would say now compared to 2008 doesn't look anything alike at all. Yeah, that's my opinion on this. Edge Finder says bearish 9 for gold, but gold keeps climbing. Explain. Let's see. I don't know if I'm going to be logged into Edge Finder on this computer. I normally am on my desktop, so I'm not logged into Edge Finder, so I can't access that right this second. Sorry about that. So we're going to have to move on to a different question. Let's see. Is there a possible sell 109,523 on EU? 109,523. You know what? I'm on Euro futures. Let me pull up Euro USD just to make sure that we're clear. Okay, yeah. Slightly different pricing on the futures market. I think I just accidentally closed my I think I just accidentally closed TradingView. Give me 1 second. There we go. Okay. 109,523. Is there a possible sell? From a technical basis, sure. Absolutely. It's, it's a resistance level, previous support, resistance. Yeah, absolutely. It's just a matter of, let's say I don't know what fundamentally you may be looking at to sell this. But if you're looking just from a technical basis, not a bad opportunity. It's all about targets, right? So what are you targeting when you enter this trade? When you go to sell from, we'll call it 109,520. When you go to sell from this area, what are you targeting? Are you targeting this support here? Are you targeting this low that we've tagged here? Because I think that's going to matter a lot. Where's your target and where do you feel comfortable placing your stops? There's very obvious legs here. A bit of support, pull back. So at this point for me, just looking at the 3 hour, I mean, the safest stop loss is going to be above this level here. And we'll go just slightly above it. Because once you break this to the upside, you're starting to make new structure. You've got this obvious lower high, lower low. You break this, and now you've started to create a higher high. Then it's almost like anybody's ball game. Now, personally, if I was looking to get in on this, which I'm not, this is not a trade that I would be looking to get involved in. But if I was, I would actually be targeting somewhere in here. And I'll tell you why. All of this price action happening in here, to me, communicates that there are orders sitting there. A lot happened here. Orders were being placed and filled and placed and filled and placed and filled. And when you identify resistance, 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 support, 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 all happening right here in this kind of smack dab in the middle of this consolidation area, I'd be aiming to enter here. Not necessarily enter here. I just don't, this resistance could hold, but I don't have a reason to believe that it will other than its previous resistance. So I'd be aiming to get in to look to sell out of this area personally. Gold, all right. A1 Trading said gold currently has a neutral -3 bias on the edge finder, mainly due to seasonality and fundamental data. So Nelsie 55. That is the explanation for the edge finder gold analysis. Seasonality and fundamental data. I would be interested. Like I said, I'm not logged into my desktop, so I'm not actually logged in on Edgefinder on my laptop. I'd be interested to know what the fundamental data is. Just out of curiosity, I have no idea what fundamental data. I guess the inflation, the slight uptick. Guess a slight uptick in the forecasted CPIs, maybe. Legend Story says CPI and jobless are fake news. News are favorable for USD, but the gold are now bullish. What happened? Fake news? I don't know. We're moving into like territory where you can't confirm any of that. You know, fundamental data will hit the market. It's not a guarantee that the market's going to take that fundamental data and move in the direction of the data, right? If that was the case, everybody who ever started trading and came across fundamental information would be billionaires, trillionaires. It would, the brokers would not be able to pay people out because everybody would just be making so much money. So just because CPI comes out one way or jobless comes out one way, it does not 100% guarantee that the market's going to move in that direction. So could be favorable for the dollar, favorable, not favorable for gold. But you also have to remember, we have this backdrop right now. Like it's kind of quiet over the last few days, maybe the last week, really. There's this big Middle East conflict in the background, right? That's still looming. So to me, gold upside with the backdrop of U.S. presidential elections coming up. It's a pretty tumultuous election. Middle East tensions. There's still a war going on in Ukraine. Like there's a lot of tension in the air. So gold continuing to rally, it makes perfect sense to me. When I think about the fact that there's so much geopolitical tension in the air right now, makes perfect sense. It is one of those things though where you do have an element of being correct, but that comes back to the irrationality of the market. CPI should have theoretically pushed gold down a little bit. There's a bit of an argument to be had to counter that idea too, though, and that's that even though we had a hotter than expected CPI, is still lower than the previous, and we're nearing that 2% target that the Feds want. So, let's look at this graph. We've come down significantly over the last couple of years on inflation. We're nearing target. Is that good for is that bullish for the dollar and bearish for gold? I don't think so. I think inflation coming back to target, 2% target. Maybe the jobs data. I think my biggest argument for some more dollar. The labor market is in a funny place because we did just get a really good NFP print, but that was just one print. Overall, the last few months of labor data has showed a significant cooling in the labor market. So I think the Federal Reserve really has to be careful about what they're doing with monetary policy in light of a cooling labor market. Yes, I know, I absolutely understand that we had a great NFP print last week. But in the context, you always hear like one print isn't enough. The markets seem to really not, well, maybe not the markets. The Doxy market seemed to really take the NFP print and run with it. This to me is too much. This move here, where we see the dollar rallying off an NFP and never coming back to where we were prior to NFP, I think it's an overreaction. And I think personally we're going to see a bit of a pullback in the dollar unless we continue to get incredibly strong, or not incredibly strong, but strong labor market data. And my reason is that one NFP print, it's like the market took that in isolation and said, "Oh, strong labor market, strong labor market." It's like, yeah, well, what about the last 3 months of labor market data? Are we just going to forget about that? Are we going to ignore this high unemployment claims that we had? I don't know. So anyways, I think I went on a bit of a tangent there. CPI and jobless are fake news. I mean, I kind of disagree. I think it's just news. I think it's data. I think it's got to be taken in consideration of the overall context. Yeah, happy to help. All right, guys, if you have any more questions for me, go ahead and send them through. I'll go over anything you guys want me to, but like I said, for me, it's been a bit of a quiet week. Haven't taken that many trades. Haven't been looking to get involved with much. I mean, just look at this. Doxy kind of rallied a bit this week, but once we hit Wednesday, we hit midweek. It's gone flat. The beginning of the week was kind of flat. We had really one push this week. Wasn't much. Obviously, stocks are just doing stock things in 2024. 2024 is the year of the everything rally. It's just nonstop push to the upside. It can't stop, won't stop. Absolutely ridiculous year for the stock market. All right, guys. I'm not seeing anything else come through. So if you guys want to, give me a follow on Instagram at official Nick Phillips. And if you want headlines to come through your Instagram feed, feel free to check out Official Victory Capital. I post a ton of Forex and futures, mostly related headlines here. And I try to get these out as fast as possible. They hit the market, they hit the news terminal, and I'm trying to turn around and push them as fast as possible. So go follow this page, hit like or follow and turn notifications on. That way you can keep up with the headlines. And I will see you guys on the next one. Peace.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.